Warren Buffett, arguably the greatest investor of all time, has Coca Cola stock as one of his biggest investments. A position he has had since the late 80s and one that has given him a return of around 2,000%. As if that wasn't enough, he also gets paid a dividend every year that pays him around 55%.
We own 400 million shares of Coca Cola stock. As you know, we've never sold a share, and I wouldn't think of selling a share.
But the question is, how good of an investment is Coca Cola stock today? Is it possible for KO stock to deliver a high return for us long-term investors even today? This is what we will look at today, and the answer might surprise you. Coca Cola, as most people know, is the largest beverage company. It's been around for over 135 years, and today they sell their drinks in basically every country. What people might not know is that the Coca Cola company actually consists of 200 different brands. If we look at their website, you'll see some of the many brands Coca Cola owns. Sprite, Fanta, Jack Daniels, Schweppes, and a lot more big brands are brands that belong to Coca Cola. So if you buy Coke stock, you buy this big basket or portfolio of different beverage companies. The company is in this way diversified, even though of course Coke is the main and flagship product. The beverage industry is seen as quite a stable industry, which means that it's quite reliable when it comes to revenue and profit. This has also made Coca-Cola stock a favorite for investors. Coca-Cola is also one of few companies that can call themselves or have the title dividend aristocrat, meaning that the company has paid and raised its dividends consistently over a span of over 25 years. We will now look at some trends and some of their financials. First thing we will see on their income statements is that the revenue of the business has been going up for the last 5 years. But if we look even further, we can see that Coke's revenue was a lot higher in 2012 compared even to today. Their earnings have gone up more in later years, even compared to previous years with higher revenue. We can also see that they have purchased some shares, aka done buybacks, which is good to see. Going into their balance sheet, we can see that they have some cash on hand, about 12 billion, but that this number has decreased the last couple of years. Furthermore, we can see that they have quite a bit of debt, which is something to hold an eye on. If we then continue by looking at their cash flow statements, we can see that the company had negative net cash flow in 2022. But if we look a bit closer, we see that this was mainly because of the dividend payout, which takes up almost 70% of their positive cash flow from operations. All in all, Coke hasn't had this great growth story in the last 10 years, but there might be good reason for why this beverage giant might give a better return in the coming years. And the clue is in their latest report. Coca-Cola's latest report actually beat analysts' estimates, and there were two reasons for why this happened. The first one is high demand on their products, and the second one is that they have increased their prices. And I want to put extra emphasis on the second one. As we all know, we are right now in a high inflation economy. People in general have less money to spend because of increases in prices. In other words, people have to be more frugal and choose which products or expenses to cut down on and which ones to not. This is where it gets interesting with Coca-Cola and its brand. Because Coca-Cola is such a well-established brand, people do not want to stop spending money on buying their products, even though they are in a more difficult situation financially. Coca-Cola's brand is so powerful, so even if they were to raise prices, people wouldn't stop buying their products, and this is exactly what has happened. Even though Coca-Cola is a discretionary purchase, meaning that people do not actually need it, and even though there are cheaper alternatives to Coca-Cola, people keep spending money on Coca-Cola's products. This extreme brand mode and the high inflation environment might be the perfect mix of things that could actually make Coke a really good investment today. If sales continue to grow, and if they're still able to raise their prices without hurting sales, KO stock could potentially give a nice return in the future while also continuing being a stable dividend aristocrat. Coke does have a high valuation. If you use something like the price to earnings metric, we can see that they have a PE ratio of around 29. It also has quite a high payout ratio for its dividend at around 70%. But if you want a stable business that pays a dividend, which today is a bit under 3%, and that has the potential to grow out of this high inflation economy and become a stronger company as a consequence, then KO stock might be something for you. I personally think I can find better investments elsewhere, but if I were to make, for example, a dividend portfolio, then this would of course make the list. Hope you found value in today's video and subscribe for more content.